Thank you. Just a quick question. Someone asked a question in the chat box about the Japanese yen. Could you confirm that my answer has actually come through to everyone? Because I'm having a slight problem with my GoToWebinar chat facility at the moment. If someone could say yes or no, whether that's come through. No?
Yes.
It has come through?
Yeah.
Fine. And just as a little add-on to that, the thing about inflation and about economies is that everyone wants Goldilocks. They don't want it too hot and they don't want it too cold. And yes, the Japanese yen is weakening. And yes, you are right. If inflation were rising, then you would expect the exchange, the currency to strengthen. But it's the point at which the strength and weakness is the starting point, because traditionally, historically, Japan has actually always welcomed a weaker currency because it helps their exports. Although I do have to say they have offshored a lot of their manufacturing. They're a huge manufacturing country, as we all know. So it started from a very if you like, from very weak, and they've always welcomed it. But it's got itself caught up in this in this cycle, if you like, of rising inflation. Or you do have to also bear in mind that Japanese interest rates are still so low; they are nowhere near what we have at the moment. So that's actually resulted in another trap, if you like. And that is, we are back to interest rate differentials. For those of you who were around before the latest crisis will remember the carry trade, which is where you would buy a high-yielding currency such as the New Zealand dollar, which at one point was interest rates were 6 or 7%, and you would sell the Japanese yen, because the Japanese yen, the BOJ, the interest rates were what, 1%, 2%, David? Yeah. And you, with that currency, you would then go out and buy assets, and you would benefit from the interest rate differential. Now, from a purely practical day-on-day forex trading perspective, us, little traders at the bottom here, what that actually meant was that if you put a trade on, say in the New Zealand yen, you bought the yen and you bought the Kiwi and you sold the yen in your account as overnight, you would be paid a little bit of interest because of the interest rate differential. So it was great. That was the carry trade. It was a very tempting trade. People stayed in it for months and months and months, building not only the position but also the money that you got, this interest rate differential, and then it all blew up. That's what always happens. Everyone piles in to one type of trade, and then it blows up. So the moves that we are seeing in the yen have also partly been driven by the interest rate differential. So you take the Aussie yen. The Aussie yen, I don't know what the Aussie is at the moment. I think the RBA raised rates. You compare the two. So if you were to buy Aussie yen on your broker platform overnight, you will be paid a positive carry. If you were to do the reverse, you have to pay for the carry. So it's a very tempting trade. So we have interest rate differential factors in play as well. And also you do have to remember that we talk about these relationships. These relationships, they work. Sometimes they work in a certain environment, then they don't work as strongly. That doesn't undermine that relationship. The relationship is always against a bigger picture. And at the moment, the picture is inflation. And if you have this wide differential in interest rates between the two parties to a currency pair, that is going to have a bigger impact than if, say, the the interest rates were very, very similar. If you look at, there's a slight difference between the euro and the British pound. It's when you have these big divergences, this big difference, that's when it attracts the attention of not just us little traders like us, but the hedge funds and what have you, and they really, really do pile into it. So I hope that answers your question. To get just to return very briefly to the CSI, we've obviously got the British pound rising. Of course, today we have our what used to be known as the budget, but I think it's just called the autumn statement now, David, isn't it? Yeah. I always think it's quite funny is when our Chancellor of the Exchequer tells us how much of our own money we will be allowed to keep. But this is quite interesting because to explain, well, why are they buying the British pound? And the only thing I can say is it could be positioning ahead of the statement. There have been lots of leaks in the last couple of days saying we're going to be getting some of our, as I said, some of our own money back in some shape or form. So it's been the pound is it's been looked at very positively at the moment, but it has also been driven higher, also because obviously we have had this quite big fall in the dollar. But as we can see here, there has been a reversal in the dollar. You could call it, the other thing to bear in mind is after you get a move driven primarily because of the market narrative, be that a piece of fundamental news, whatever that is, when that particular instrument comes to a significant technical level on the chart, you will often get a bounce. And here we can see the S3. So if you like, a bounce higher doesn't necessarily have to be because the landscape has changed, because there's another piece of news has come to contradict it very, very strongly. It could simply be the technical, what I call a technical bounce. And this is where you have to try and marry the fundamental picture with the technical picture, and be aware that although the fundamental picture may be the main driver, the technical picture can be just as strong, particularly when the instrument, the chart, reaches one of these very significant levels. And if you use the Camarilla, whether ours or your own, you will know that the S3 is an important level. And of course, you look at your VPA as well. We've got a nice little hammer candle down there. We've now got a pivot. And we have a decent amount of volume. So why would we not expect that to reverse? It doesn't invalidate the move lower from the fundamental driver, but it's just something to be aware of. And that's what makes trading this market so fascinating. Yes, there are traders who simply focus on the technical picture. That's all they do, which is fine, and it will carry you a fair way. But at some point, you do have to try and build what we call this 3D approach, this three-dimensional approach, look at the fundamental and look at what the related markets are also telling you. Just to go back to the pound yen, because that's one of the ones that, as I said, in our list on the matrix, when one currency and all the pairs are moving strongly in one direction, it really doesn't pay to go against that flow. With the yen, it's very easy to see because the yen is always the counterparty. That is when you will get some really tremendous trading opportunities. And I wanted just to highlight the daily chart for the pound yen. And we can see here, we've had this really nice run up. This is from the 13th. This is last week, the 13th of November. In fact, we had a short period of consolidation. Then we had this run up. And I think we have one of our really classic VPA signals, if you like. We have rising prices, we have rising volume, and then what do we see at the top? We see this candle. We have higher volume than that candle, big range on that candle, Then we hit this, then we have this candle here, more volume than we had. But what is the candle doing? If that were going to go higher, that candle there should be up here somewhere. It's not. That is a very strong signal. And that is telling us it's a warning flag. It doesn't often reverse immediately. And in fact, it did. And then we start the move lower. We also hit the outermost band, if you like, of the volume point of control. These levels here, these lines here, are all created from the volume point of control. This was the volume point of control here. We can see this long sideways consolidation phase. Again, going back to looking at the Dixie, what did we see? We saw the VPOC itself was acting as resistance, building this very strong platform that we see here that goes all the way back here. We had another previous congestion. And this is what I said, when you have the break higher, we have a volatility candle, lots of volume under that volatility candle, a retrace, and then we start moving up again, then back into congestion. What we say in the volume book is this is where trends are born. This is where they're spawned, like the salmon that go back to their breeding ground. So congestion phases are not to be feared. They can be frustrating, they can be annoying, but that is where the next move higher is going to happen. Right, to get back to this candle here, so we know that is an anomaly. So what is likely to happen? Then we start moving lower and we see volume rising. But look at the candles. Yes, we do move lower, but at the end of the session, there is buying coming in there, and it happens again. And we have buying coming in there again. And then yesterday's candle, we have going down again to this support line, and up it goes. And you've got rising volume. And yes, you've got the falling price, but look at the candle. What is the candle telling you? Now, the thing with Forex, you have to always remember is, of course, we are talking about 3 separate sessions. So in that candle here, this one from yesterday, overnight, getting down to the point where that price reversed, it would have been a down day. So whenever you join the Forex session, you have to, if you like, investigate the interior of that candle and see where the reversal, did it happen in the London session? Did it happen in New York? Just be aware that, as I said, in the daily candle for Forex, you are always looking at 3 sessions in one. Overall, though, overarching, what it is telling you is that despite what went on in the session where we did have the sell of the candle, the market, the pressure from the other sessions, if you like, was sufficient to push it higher. And this is the key candle where we actually do get the reversal, and this is what we have seen this morning. And from a bull perspective, it's good to see that it is actually been pushed over this resistance, which will now act as support at 185.83. So that's what we're seeing on the daily. So how does that impact what is happening on the time frames that most of us look at from an intraday perspective? And the thing we always have to remember is whatever we see on a slower time frame in terms of the price, let's call it the price cycle, as I said, this congestion, this trend, the pullbacks, etc. You will see exactly the same thing on the faster time frame, except obviously it develops much more quickly. And here we have, this is the 5-minute chart on my trading view. And what I have here, I just have the volume, and I have under here the Renko version that we've developed for TradingView, which is what we call the time accurate, whereby, although Renko is a non-time based charting means of charting, what we've managed to do is get it as close to what is happening on the time chart as possible, because with Renko, it's a brilliant way of taking out the noise of the market. And my particular favorite is the one that we have on MT4. You do have to either set the values for the brick size itself, because it's not tight. You have to set it to 1 pip, 2 pip, or 3 pips. But the time accurate one here does all that for you. And we can see here when we had the price beginning to move higher. This was actually overnight, if you like. We can see that the pound yen was actually being bought as we came overnight. The volume is consistent with what we would see. It's relative to that particular session. But what the time accurate does, it just helps to keep you in the trend, even when we have a period of consolidation very, very early this morning. This is accurate. The time that we see below, it's to my local time until we come to the London session, where you would expect to see this big increase in volume, and of course the volatility that often comes with the London session and the traps that are inevitably laid. And again, we read the volume in conjunction with the price, with the price candles. And again, the reversal here, we have this going higher. We've actually got a nice candle, but though given the range of that candle and the volume, we would think we would be going higher. We don't. We do get this little hammer candle, but it's back into the congestion. And what did I say about? Again, it's really a congestion phase, and we're looking for a break below the volume point of control. But based on what we see on the daily chart, does this look overall bearish given what's happening over the last couple of days? I would say possibly not. But we also do have to be aware that this has got the British pound, and we do have the autumn statement coming up. And the final thing I would like to say, obviously, tomorrow is Thanksgiving. The US markets will be closed. They close early on Friday. The Forex market will be open. Obviously, reduced liquidity. What that normally translates to is much higher volatility, a lot of price spiking. So if you do intend to trade, just be aware. But looking at this piece of price action that we see here, what do we see? We do see this break, but we do see the volume falling away as well. The Renko has actually changed color as well, and we're also going to be hitting some decent support here at 180, 186.52, and then we've got some more support under here. This is actually the support, the resistance support levels created by this price channel back this morning. So those are the things to be aware of. Using the slower time frames to give you some kind of perspective on what perhaps to expect in the session ahead. And my final time frame here is actually my hourly chart, which is where I keep the Camarilla levels, and just to see, are we at a significant point? These are here all week. Hasn't got to the R3. If it does get to the R3, then I probably would expect a pullback and a pause. Where did it stop? The 2 is not so significant, but it aligns with this resistance level that we have here back to last Friday. We're actually moving between the R1 and the S1. This is what we call a kind of buffer zone. It's like a neutral zone. If it's going to go lower, this is where it will stop at 186. But as I said, this is all against the background of the autumn statement that we have coming up. Not quite sure when, but it's sometime this morning. So if you are trading the British pound, just be aware. Right, can I pass back to you, David? Is that okay?
Hi, everybody. Welcome back. Thanks, darling. And as promised, I'm just staying with TradingView. And just before I go to this one, which is a quick resume of the Renko indicator for TradingView, because it has 2 variants, and the one you're looking at right now is very different from the standard Renko. But I just wanted to pick up on something Anna said earlier on about the pivot indicator. It's probably one of the most misunderstood of our indicators, because it's very simple in the way it works in looking at 3 candles and their relationship, and whether you've got higher highs and higher lows for a pivot to the upside, or whether you've got lower highs and lower lows for a pivot to the downside. So it's a very simple indicator in concept, and unfortunately, I think a lot of our customers and traders use it to try and give them an edge in terms of intraday price action. So a pivot comes in upside, downside, and it's, oh, let's go short, let's go long, which is fine. It gives you a perspective on intraday strength for sure. But the biggest application of using that pivot is in, as Anna described and showed you on that chart, is using it for what we call congestion entrance and congestion exit, and giving us a leading edge indication of when we are moving into a potential congestion phase and when we are coming out of a potential congestion phase. It is explained in the VPA book. And it's probably, we are thinking about writing a follow-up to that book, and it would certainly, we'd spend a lot more time on this because it's so important at the leading edge. You see a pivot high come in. Okay, now you're waiting to see what happens. Is it just a temporary? You get a pivot low comes in. Okay, that's possibly setting a floor and ceiling of congestion. Then maybe you get another pivot high which comes in more or less in the same level as the first pivot. Now it's giving you a much stronger indication that we're moving into congestion, and so on and so forth, and equally the same when you come on the other side. Now, in addition to that, we have volume price analysis to assist in where we're moving into such potential phases. For example, where maybe the price is stalling, congestion, the spreads are narrowing, volume's falling away, and it's a classical example of a market that is getting a little bit tired and is therefore likely to move into congestion phase. So it's just another assisting tool, if you will, but it's a very powerful little indicator. And I just wanted to make the point that, as I say, I think a lot of customers do use it in perhaps the wrong way, and we need to reinforce it. Anyway, Anna showed you a fantastic example of that at the start of this session. This is the Renko, and the Renko indicator on TradingView has two modes of operation. You've either got the standard Renko, which I won't dwell on because you're all familiar with it, I'm sure. This is what we call the time accurate version of it. And you can switch between the two. You can toggle down here in terms of the settings. So you've got the time accurate we're on at the moment, or you go to standard. It's very simple. What the time accurate Renko does is really two key things which differentiate it from a standard Renko. A standard Renko can be quite noisy at times. And what the time accurate does is really smooths that out. And that is perhaps self-evident from what you're seeing on the screen. What you see, which is completely different from the Renko, is you get these walls. You do get physical walls which are building as the price action unfolds. So first of all, it removes all that noise from a typical Renko, which is great. So it's very much more measured, even paced, stable, if you will, and really presents the price action with these levels where you step up, you go to a level, you pause. If the market's in congestion, as it was here, we came to the downside, we turned red, but it didn't really generate very much. Then we turn up again and we start to march northwards. Then we get into a congestion phase here and we go sideways. But it's not a scary sideways. It's just a sideways that's telling us that at the moment, for the time being, we are seeing bullish momentum maintained, or bullish sentiment, if you will, maintained. And then we march up a few more levels, and then we're into another congestion phase. And of course, you'd have this running alongside a time chart, so you'd be looking at the volume profiles as well associated with the price action. And then we're starting now, as I'm talking, we're starting to see that begin to develop into a bearish trend. We've not stepped down. We've actually gone straight down into two bricks, which are following one another. So very much more typical, if you will, of a Renko pattern where one brick follows another. So that, in a sense, on the time accurate, is telling you that we've actually got quite a strong reversal in sentiment here going on at the moment from a time accurate perspective. And the other point about it, which again is maybe it is, maybe it isn't self-evident, the reason we call it time accurate is because the Renko works at the interface. It works in lockstep with the price action. When you look at a Renko chart, because a Renko, typical Renko, has no relationship to time, it's quite hard at times to tie it into the associated price action. It will work alongside, but it doesn't work in tandem because it doesn't, because a Renko chart is independent of time. A Renko brick will form in the associated brick size. Therefore, it has no relationship to time. Whereas on the time accurate one here, it's always tied to the price action. So you know instantly, and you can see it visually. We know we're in congestion, and we see it here on the time accurate. We know we've got a bit of a bearish sentiment that's starting to ripple through into the market. We can see the price action developing here on the price chart, and it's starting to build also on our time accurate as well. So it's a very unusual variant of the Renko. You can go back and use the standard Renko as I've shown you, but it's 2-in-1. It's unique as far as we know. No one else has developed one like it. And it is proving to be very, very popular because, as I say, it does smooth out all that noise from a typical Renko. So I wanted to highlight that one, and I've just dropped that out of the way. I'll come back to when we wrap up, look at all the various sites and what have you. But this is on NinjaTrader now. You've seen this workspace before, probably, if you come along to these sessions. And I've got 3 workspaces here and one, if you like. I've got multiple currency matrices here, 1, 3, and 5 minute on the left-hand side. I've got the currency array, which is on the 5 minute on the right-hand side. And down at the bottom here, I've got this. This comes with NinjaTrader. It's a very simple correlation tool which they give you associated with the platform. And it's quite a handy way of, I've got this set to the hourly time frame here. And what this is telling you is, well, what's correlating with what? Are currency pairs that you expect to correlate, are they correlating in reality? And when I scan over this, the true answer at the moment is that there's very little that's correlating. For example, you would expect to see euro dollar correlate reasonably strongly with Aussie dollar, which it isn't. You would expect it to see to correlate fairly strongly with the other dollar pairs, which it isn't. If we go to cable, for example, what's cable correlating with? Well, not a lot. And in terms of correlation, the closest, I guess, is euro dollar here at 0.88. Anything above that sort of figure, 0.85, you can say is a good, strong correlation. Anything below 0.8, once you get down into the 0.7s and below, there really isn't a strong correlation. So anything that's at that level is really telling you very little, and there is very little in the way of correlation. And if you look at the yen pairs, at the moment, we've got a very strong correlation between the dollar yen, which is this column, over to euro yen. So you kind of pick up lots of bits and pieces like that. It's interesting. It's a little bit limited because it only gives you 4 or 5 different time frames. The hourly one is the fastest. And if you want, there are much better tools over on a site which has been renamed. Forgive me, I can never remember. It was mataf.net. I think you'll find it if you look up Mataf. But if you go to that site, you'll find a whole heap of these sorts of tools for correlation, and you'll be able to look at all sorts of different time frames as well as just the slower ones here on Ninja. The reason I have the currency array indicator and the currency matrix indicator on the same workspace is, again, to remind you, I've isolated out here on Ninja on yen. And the nice thing with the yen, because the yen is always the counter currency, you see very clearly the sentiment across the yen complex. In other words, are all the yen pairs doing the same thing or not? Have we got any divergence? Because if we're trading a yen pair, we ideally want to see all the other yen pairs going in the same direction, because it means everyone is either buying or selling the yen. And hence you want to see that relationship maintained. Now, when we started the session, all of these were pointing up here. They were all aligned, very strongly aligned, and I think the lowest one down here was somewhere like this sort of level. So the currency array gives you that immediate visual perspective on what is going on in terms of broad sentiment. Now, what you can see here is very clearly, as these start to swing lower and away from this very steep angle to the upside, you're starting to see that shift in sentiment. We're starting to see that we saw a little bit on the time accurate Renko with the CAD yen here, starting to get a little bit of bearish sentiment develop in this complex. And these have already started much more quickly. Certainly the euro yen is leading the pack to the downside. So it's a great visual way. Now, the thing with the currency array, which I stress every single time I do one of these, is that the currency array is a much slower perspective on what is going on. And by that, I mean the look back period is, I think it's 70 or 80. I can't remember what the default is. So when you're looking at the currency array, it is much more of the way I explain it is, if you're familiar with the trend monitor and the trends indicator, the trends indicator will always be the first to shift because it works very, very close to the price action, whereas the trend monitor takes a much slower perspective on what is going on. In terms of the currency array and the currency matrix, it's a similar relationship. The currency matrix has a look back, I think it's of 7, so it's very, very close to the price action. So if I isolate out here on yen, you can see, you can get a view on that. Let's just click those out there. The 1 minute is always going to be pretty noisy, but on the 3 minute and the 5 minute, you can see what is going on. You can see the sentiment, how it's shifted on the complex. All of these are now down at the bottom, and what we're looking for here is for these two to join them. But you can see where the Aussie yen sits. It sits here. It's already below the fulcrum of sentiment change, up here somewhere at 0, around about this sort of level. Whereas over on the currency array, whilst it was up here at some point, it is now shifting lower, but it's not shifting at the same speed because this indicator looks at the time horizon over a much more extensive period. Whereas on the matrix, it's a much shorter period, and therefore you're getting a much more instantaneous view of what is going on in terms of shifts in sentiment. So the point is this: currency matrix is much more associated with intraday scalping. Currency array is much more associated with slower term, in inverted commas, trend and swing trading, if you will. But if you have the two of them in combination, as they are here, you get those two perspectives. So you're very much looking at two different time horizons, a much faster one with the currency matrix and a much slower one. And you can see really what's going on because all of these have shifted up to 1 minute now. Now, if that ripples across into the 3 and the 5, that is telling you that bearish sentiment is fairly short-lived. And we may well see all of these shift up to the top, because what you're always looking for is what I call a full house. Here we have a full house at the top in 1 minute. Doesn't matter whether it's 1 minute or 1 hour, whatever it is. That means that the sentiment in this very fast time frame has shifted. Appreciate it's only for a few minutes, but the concept is exactly the same. So we're always looking for this full house effect where all of these come down here if we're seeing true bearish sentiment develop, and these two come down here as well to join their brothers and sisters at the bottom. Finally, just before I move away from the matrix, to highlight these average lows and lowest, and average highs and highest. This gives you a metric very much like the levels on the currency strength indicator, where it will give you an idea of whether we are at the top and bottom, if you like. The highest here, you may not be able to see it, but that's 24.42. So over the last 7 or 8 bars, the strength here has managed to get to a value of 24.4, whereas at the moment we're at 14.75. So in the concept of, did we actually reach the maximum value that we saw in recent times, the answer is no, nowhere near. If we move to the bottom here, we're currently, the yen here, we've got 22.94 and the lowest was 27.29. So in a visual way, we can imagine that we are certainly getting down to our overextended periods or overextended levels, if you like, simply by virtue of looking at these numerical values. And these, we've added these, I think, to Ninja, I think TradeStation. I'm not sure if we got them on NT45, but again, all of these things will catch up in due course. Apologies, it just takes quite a lot of time to do all this development work in association with everything else that we do as well. So I just wanted to highlight that. Let's have a quick look at the CAD yen in real time on the, there we go. I think it was the CAD yen I've got up here. There we go. You can see there how that really nice bearish trend is now developing very strongly. Really nice move. This is the 1 minute, the 15-second. I don't suggest you start with the 15-second. The only thing I would say in terms of the 15-second time frame is that it's great for practicing VPA. If you want to get very good at volume price analysis, interpretation, and analysis very quickly, then using one of these fast charts is a great way to do it. The signals are all the same. It doesn't matter what time frame you use. The difference is if you're using a fast one, they will come up much more quickly, and it will also sharpen you up in terms of the ability of reading, interpreting, spotting the anomalies, picking up reversals, and everything else. Great little trend here run down, really, really nice. And really, it all came about. If we go down to the slightly slower time frames, here we go. The interesting thing here is backed up. I've only got the VPOC on here, which is the yellow dashed line. So at this point, we were trading around the volume point of control. And what we're always looking for is a breakaway from that at some point. Now, in addition to VPA, we also use congestion very strongly on in terms of support and resistance levels. I'd normally have the accumulation distribution indicator on here to give me my levels. But we can look at very simple. It's a very simple chart. Say we've got the VPOC on here. And once you start to see these sorts of candles coming in, where we're getting a lot of candles with wicks to the upper body, we've got wicks to the upper body, another wick to the upper body, another wick to the upper body. Those are the sorts of signals you're looking at in combination with the associated volume down here at the bottom to really give you a clue as to, is this market, is it looking bullish? Is it looking bearish? Are we going to continue in congestion? Well, it's certainly not looking bullish at that point. We've got a similar sort of level. We're at a phase here. We're just going sideways. We had an awful lot of effort to rally here. Really didn't go anywhere. We get a big spike in volume here. Doji candle, really not going anywhere particular. Back down we come. We get a little bit of buying coming in here, but it's really not following through very well. You can see the volume falling away here as we're trying to rally. And then we move into this phase, and now we've got this really nice rising volume, falling spreads. And the other thing with the volume point of control, the VPOC indicator, is that not only does it give us a sense of where we are in terms of congestion phases, but it also gives us this volume histogram down the right-hand side. So it gives us, we move volume, if you like, from the x-axis to the y-axis. And we're now looking at volume in precisely the same way as we do with support and resistance. We're looking at it in that way. The conceptual way we do it is precisely the same, because where we have high volume areas, we expect price to congest. Where we have low volume areas, we expect price to move through pretty quickly, which is hugely valuable when you're trading on a trade that you're in or you're thinking of getting in. Maybe you're in there already. Like this example here, we get down to this low volume region where we've got low volume nodes here. What happens to the price action? Well, it goes through pretty quickly. Why? Because there's very little in the way of volume at that point to cause it to stop. Why would it stop? Now, you might find that you have some price congestion there, but certainly from a volume support and resistance perspective, we wouldn't expect it to pause because there is low volume there. Gradually, as we descend into this higher area here, we are starting to see a little bit of congestion. But this move has not yet come to an end. We're still seeing the continuation of that, and on down we go. We go down onto a slower time frame, onto the 5 minute. Nice little push up here. When you see these little candles here that appear in price waterfalls, as we're seeing here, these are great confidence builders, huge confidence boost. If you decided, maybe you set a level here and said, well, I'm going to wait till I get to this level maybe before I jump in, maybe a little bit nervous of getting in early, but you've got in here, fine. If you missed all that, maybe you're out, maybe doing something else. When you see these candles in a price waterfall, these are efforts to rally. Basically, this is the market makers, the big operators, whatever. They're accumulating, they're having to buy on the way down, then they have to force that whatever it is, that stock, that price, whatever it is, back into the market. They force it up here. They're having to sell back into the market to get rid of stuff that they don't want before they take it down to the next level. And you can see the volume here associated with that is really good. So it's just another. There are so many signals, so many ways of looking at price action in associated with volume, and then you bring in all the other indicators, the VPOC, the VRSI, the support and resistance with the accumulation distribution indicator. They are all there to help, to assist, to give you confidence. If I'm looking at this chart right now, for example, we're pausing at this level. Why are we pausing at this level? Because we've got a huge amount of volume sitting here. We don't expect it to go through there. So don't sit there stressing when your trade comes to a bit of a halt and starts to grind. Go and look for the answers as to why it's grinding. Why has it stopped? Is there something obvious on a slower time frame? And this is why we use multiple time frames, because it gives you all that perspective. It's the analogy I've used many times is driving on a 3-lane highway, and you're using your center lane as your trading window, if you like, and then on the left hand side you've got one mirror, on the right hand side you've got another, so you've got a faster, depending on which country you're in, of course. You might have in our country we've got slower time frame on the left, and we've got faster time frame on the right. So you're sitting in the middle and you're seeing what's going on in different perspectives. Now, I tend to use 6 or 8 time frames, but 3 is an absolute bare minimum. And from that, you can then do that interpretation. If you can handle more than that, fine, absolutely fine. Then you should, because it gives you different perspectives. You'll see volatility triggers come in on slower time frames, which will tell you why something has paused. You'll see support and resistance on different time frames. You'll see VPOC volume like this on different time frames. It all helps to give you the complete picture. So we're pausing at this level. That's one of the reasons. But if we break to the downside, if we get through this, certainly from a volume perspective, at any rate on the VPOC, I would expect that to move through there pretty rapidly. Why? Because there's very little volume there. And then once we get through that level, once we get down to 108.25 and below, then I would expect it to pause again, because we're back into big congestion phases. In fact, almost as large as the volume point of control here is at the top. And if we get back down here and start to congest, then almost certainly the VPOC would jump down here, because the VPOC itself, the yellow dashed line, it's not cast in stone. It doesn't sit there forever. It will move depending on the point at which price congests and builds a deeper level. So a really nice example there of a price waterfall, and looking at it across the time frames, you can see it here. Very weak. Another weakness here. It really is looking weak. 2-bar reversal there as well, and then on down we go. Nice widespread candles to give us confidence to hold that position for the time being. I'm going to wrap up there because we've run over time. Apologies about that, and sorry about the start being rather delayed. We usually have technical difficulties here. Those of you who know us well will know that we usually have something that goes wrong. Very quickly, I'll run through where you can find all the indicators, all the bits and pieces. This is Quantum Trading, quantumtrading.com. All the platforms there, 4.5 on MetaTrader, 7.8 on NinjaTrader, TradingView, and TradeStation. And whatever you've bought in the past, whether you've bought one indicator or a group of indicators, doesn't matter, going back 10, 11 years, we'll have you on the system somewhere. If you want to upgrade to a full package, or you want to move across the Forex education program, or indeed the stock trading program in due course, you will get a benefit on those indicators, so you'll get a credit for them in every single case. This is Quantum Trading Education, where you will find the stock trading program. This is the Forex trading program at the moment. I mentioned the funded program here at the moment. It is paused, but as I say, it's moving to a completely new, well, not a completely new model, very similar model, but much broader. So as I say, you'll have 1, 2.5, 5, 10, 15, and 20,000. One-off fee to enter. Once you've passed the evaluation stage, then what we do is we multiply that amount by 4. So if you start with 20,000, if that's your chosen point, you choose. We don't mind. You select what level you want to go in at. If you start with 20,000, then we will quadruple that, and you'll get $80,000 to trade in the account on the next level. And then we double it, 160, 320, so on, 640, right the way up to 2 million. As I say, a lot of the rules and regs have been very much simplified. We've increased the leverage on certain levels higher up the piece. As I say, you can trade a much broader mix of markets now. So it's very appealing, and we've done that because it's been very popular, and we wanted to broaden it as well to give you the opportunity if you want to trade a smaller size, and equally if you want to trade a bigger size as well. So that's all going on, and that will be done in the next, hopefully in the next 2 or 3 weeks as well, and be back up and running again. Finally, just over onto Anna's site. This is where you'll find all her analysis. You can follow her on the social stuff. All the books are up there on Amazon. We are always hugely humbled by the comments that we see on the books, like the volume price analysis book, where it really does change traders' perspectives, and many of those traders and investors have been struggling, and they find volume, and it is the key that really unlocks the door. And the beauty of it is that it doesn't mean you have to change anything. If you have an existing strategy or you have an existing methodology that you use and you find helpful, but you can't seem to make it work consistently, then maybe volume is the key that will unlock that door for you. And that's certainly the case for many people who've left comments there. Very effusive and glowing comments, I have to say. They are very, very humbling to read and to see. So I hope you've enjoyed the session. We're going to wrap up there. We will be back this evening, I think it's 6 o'clock our time. So do come along if you can. More VPA. Thank you so much for coming along today. Hope you've enjoyed it. Hope you found it useful. And we will see you later on in the day. And no doubt we will see what's coming up in the budget shortly if you're in the UK and care in the UK. But there we go. Thanks for coming. See you soon. And bye for now.